on the Personal Finance Corner. Gajendra Kothari of Etika Wealth Management joins us. Gajendra, Ekta was just pointing out how in the October to December quarter, mutual fund average assets etc. have scaled to a 13-month high. Could you tell us what has led to this demand?
Yeah, so the demand had come basically from two fronts. One was from the ultra short-term bond fund category, wherein a lot of corporate and institutional investors invested into these funds because of the higher interest rates. And the second and surprising kind of flow was from the equity funds, because last month there have been quite a number of NFOs, new fund offers, wherein roughly around 1,000 to 1,500 crores were collected from retail investors. So that was a very positive influence for the industry.
Okay, what about the trends that we're seeing in this quarter as well? It's too soon to tell, but in terms of any sort of nascent trends, are you seeing that sort of interest continuing by the retail investors? And what about something like FMPs, which were at a record high in terms of AUMs in the previous quarter?
So we'll continue to see a lot of inflows in the debt funds category even in this quarter because of the higher interest rates, and also because of a lot of FMPs which will be coming right now because of double indexation benefits. So again, this quarter will be very strong on debt side compared to equity. Equity will be quite muted as per my expectation.
Okay, let's address the first caller. Her query. Vishakha has called in from Jodhpur. Hi, Vishakha.
Hello.
Hi, could you tell us your question?
Yes, I have made a switch from one equity fund scheme to another. So will long-term capital gain be valid from original purchase date or from switch date?
Gajendra?
Yeah. Vishakha, hi. See, the switch which you have made is nothing but you are redeeming from one scheme and you are investing into another scheme. So if you're switching for the first time, so whatever was your original purchase date and the switch date, so if the period is less than 1 year, then you will be liable for short-term capital gains tax, which is at 15%. And if it is for more than 1 year, then it's a long-term capital gains tax and you don't have to pay any tax on this one. Now, if you're making a second-time switch, so then your original date will be the switch date which you did in the first time and not the original purchase date. So this is an important thing to remember.
Okay, up next we also have an SMS query coming in from Ronak Shah, who writes to us from Bangalore. He has 10 lakhs in his saving account. He would like to use it for investments, 3 lakhs for short-term needs and 7 for long-term. He would like to know where to invest for the respective time periods.
Hi Ronak, first of all, I'm surprised because this kind of amount should not be lying in a savings account for a long time. And secondly, because I'm presuming that rupees 10 lakhs is lying in the savings account, you are into highest tax bracket. And so and you mentioned that you want to invest 3 lakhs rupees for short term. So I'm assuming the time horizon is roughly between 1 to 3 years, wherein you can choose debt funds because of its tax efficiency. So I'll suggest 2 debt funds basically to invest in this time period. One is the UTI short-term income fund, which is a consistent performer, and the another one is Birla short-term opportunities fund. So both the funds invest in low end of the duration. So the volatility will not be very high, and you can expect a consistent return. And the second leg of investment would be for your equity funds, so which is basically for 5 years plus kind of horizon. And there again, I'm suggesting you 2 funds. Basically, one is Franklin Dynamic P Ratio Fund of Funds. So it's a hybrid fund. And the second one is ICICI Focus Blue Chip Fund, which is a large cap oriented diversified equity fund. So if you see these 4 fund spectrum, overall your portfolio is very well diversified into different risk brackets, and it's very well tax efficient also.
Okay, thanks Gajendra for joining in. Just a couple of these